Anyone can make money when the market goes up, but do you want to learn how to make money when stocks go down?
In this video, we'll be going over how we made a trade that ended up making over 300% return in a matter of hours.
I'm Omar. I'll be covering the fundamentals of the market condition.
And my name is Matt, and I'll be going over the technicals behind the entry and the exit of this trade.
All right, so getting into the first fundamental reason as to why the market sold off was because on September 10th, the Democrats blocked a slimmed down Republican coronavirus relief bill. Now, talks have been stalled since August, and this rejection by Democrats leaves the entire stimulus deal talks in limbo for now. Now, this is bearish for the markets because this leaves the market with uncertainty. Now, the next reason why markets sold off was because of this short-term dollar rally. So the dollar rallied from around 92 on September 1st to 93.6 at the high on September 9th. Now, why is this significant? The reason is because looking back at the history of the dollar, back when the market started to crash, the COVID crash here at the end of February, coming into March, right, this area, the dollar sold off, right, but then had a huge rally from March 8th to around March 22nd, which coincidentally is when the market bottomed. See this huge rally here. Now, why am I showing you this? I'm showing you this because a weaker dollar makes imports more expensive and exports more attractive, while a stronger dollar makes exports more expensive and imports more attractive. A weaker dollar is good for stocks because corporate earnings can get a boost in overseas revenue. That's part of the reason why we've seen such a rally in stocks since we bottomed in March. See here, nice sell-off on the dollar, right? So the third reason as to why markets sold off was because, again, on September 10th, the European Central Bank decided on Thursday to keep its interest rates and coronavirus stimulus program unchanged. Now, this decision was bearish for markets because the markets want more stimulus. They want more liquidity to continue higher. Hearing that the central banks were not going to step up with even more easy money made the markets fall. Additionally, the ECB forecasted that by 2021, they expect GDP to grow by 5% and by 3.2% in the year after that. Now, the last, but certainly not least, reason as to why the market sold off was because the NASDAQ whale. Now, SoftBank, a Japanese conglomerate, was unmasked as the large trader that bought huge amounts of call options on American tech stocks, which is believed to have sparked the incredible tech rally. During this week, SoftBank was taking profits on their trades, which is another reason as to why markets sold off. So as tech sold off, the markets follow suit.
All right, so now for the technical side of things. SPY had been selling off for about the past week and a half, week or two, and it's been approaching the 50 EMA right here on the daily chart. It's been breaking under the 200 EMA on the 4-hour chart, and you can see all of the EMAs have crossed under the 200 EMA on the hourly chart. And SPY has a major support right here on the 50 EMA on the daily, which is at 331.97. And after getting rejected by the 9 EMA the day before and getting rejected by the 200 EMA on the 15-minute during pre-market, you can see that it's looking pretty bearish at the start of the day. Knowing that this was a Friday and the market would be volatile, I decided to stick out for about the first hour or two, just to wait for some confirmation below a break of 334, and that was about the low of the day before, 333.5, 334, around there. And we had strong momentum downwards at the beginning of the day, and we bounced right off of the previous day's lows. So the next few candles, I just waited for some confirmation, right? And I wasn't bullish right off the bat, but we had broken above the VWAP, and the only way I would change my mind about being bearish to bullish would be if we had broken above the pre-market highs, which were at 337.5, just about there. Around the 200 EMA, if we had broken above this on the 15-minute, then I might have changed my mind to be bullish. Once SPY got rejected at 337, we had a huge uptick in bearish volume, and this candle broke below VWAP. So I knew I was onto something, and I waited for confirmation on my entry. And when I'm looking to enter a trade, I will always keep two things in mind. First one being my entry will always have a confirmation below support or above resistance, which consists of a new candle that forms entirely above or below that line. And here it is, this candle forming below VWAP. And the second thing that I'll keep in mind is if I enter a trade with confirmation, then I'll only exit the trade with the same confirmation unless I've already hit my price target. After I entered this trade, SPY came back up a little bit, these two green candles right here, and it retested the VWAP, but it couldn't hold above it. And of course, I was down on this trade at first, but you always need to remember, you're never going to catch the perfect entry. The stock market doesn't go straight up or straight down. Your job is just to predict the overall trend and profit off of it while following a plan. SPY couldn't hold VWAP as buying volume was very low in both candles, although went against me, could not show any confirmation above VWAP. So I stayed in this trade and I was pretty confident. SPY then saw a huge uptick in bearish volume and broke through the low of the day at 333.72, and then it continued on to break the low of the previous day at 332.9. As I mentioned before, my low price target for the day was the 50 EMA on the daily chart, which is the biggest support I had seen. So once we had hit 331.97, I got ready to sell my contracts. From here on, you can see SPY sold off until it hit 331. But you've always got to remember your plan and you cannot deviate from it. Selling on large volume downwards is always going to be better than chasing down the price of your contract as it bounces against you. And just to show you the chart of the actual contract, you can see here are the entry and exits that were alerted to the group.
If you enjoyed this video, be sure to leave a like and comment and subscribe to show your support.
If you want to learn more, check out the link in the description below to join Trading Alphas for only $1 for your first month, where we provide real-time alerts to our trades, daily in-depth analysis, and tons of resources to help you become a successful trader.